Let's view one of the stocks which is under tremendous pressure today and perhaps likely to be going forward as well. That's what the analysts are saying. IEX, temporary freeze of 10% that's open. Now the stock is in another temporary freeze of 15% after CERC has approved implementation of power coupling with the day-ahead market. Vivek joins in. The worst fears come true, Vivek, and the stock price telling you that.
Absolutely right. Every time we've discussed IEX, we've always ended or always cautioned our viewers saying that, the biggest overhang remains the likely implementation of market coupling. And that fear, unfortunately, has actually fructified. Now, let's quickly look at, given the fact that we now know that market coupling will be implemented from Jan 26 in the day-ahead market, let's quickly have a look at the impact that this will have on IEX as well as other listed stocks. Of course, IEX, we'll go through that in detail. Dalmia Bharat, remember, owns almost 11% stake. So that's another company that will see the value of its holding in IEX actually fall down. And the other stock, importantly, is PTC India. Why is PTC India in focus? Remember, PTC India holds close to 25% stake in the rival exchange of IEX that stands to benefit most likely from higher volumes, which is called as HPX. So PTC India today is also under focus. Now, talking about IEX itself, what our brokerage is saying. UBS says that this is a negative surprise both for them as well as compared to market expectations itself of the implementation of coupling. The coupling of real-time market is also going to be considered at a later stage. FY25, just have a look at the contribution to the revenue. Day-ahead market contributed 50% and the real-time market contributed 30% to the revenue. So almost 80% of the revenue will be impacted by the implementation of market coupling. Bernstein says that this particular order is worse and different from what was built in. Not only volumes, they also say that the transaction charges, which are quite high at IEX, also will come down sooner, given the fact that now exchanges will now have to compete on an even footing, given the fact that the price discovery process will happen across all three of the exchanges in a roundabout manner. So now IEX, remember, has 40% market share in the term ahead market, and the DAM is the most important with 46% of volumes of total IEX coming in from DAM. So what they're saying is that moat of liquidity has gone. Only way to compete is through transaction charges, which will be reduced. So overall, a negative development for IEX, and no wonder then you're seeing the stock. Remember, two things to keep in mind. Number one, it's in the F&O ban, and number two, results are scheduled for later today.
Okay, all right. Thanks a lot for that, Vivek.